All right, let's dive into Allen Chemical's latest earnings call. We're going to go way beyond the headline numbers and really get under the hood to figure out what this all means if you're a long-term investor. We'll be looking at their big strategy, the promises they're making, and how that all stacks up against their actual performance.
This one question pretty much sums up the entire call. On one hand, Allen Chemicals is painting this incredible picture of massive, ambitious growth. But then you look at the facts on the ground this quarter, and it's a story filled with operational hiccups and missed targets. So which narrative is the real one? That's what we're here to figure out.
So, here's the game plan. We'll kick things off with the big headlines, the stuff they wanted you to hear first. Then we'll dig into how their main business is actually doing. After that, we'll check out their huge bets on the future, listen in on the tough questions from analysts, and finally, wrap it all up with a clear bull versus bear case for investors.
Okay, first up, the headlines. Now, like any company, management led with their best foot forward. They use these announcements to really set a positive, forward-looking tone for the rest of the call. And this, right here, was the star of the show. The very first thing they announced was getting the green light from the India semiconductor mission for their big project. Now, for a specialty chemical company, this is a huge pivot into high-tech. It's a massive strategic win, and frankly, it's the foundation of their entire growth story. They absolutely wanted this to be the main takeaway. But then, the picture gets a little more complex. So, alongside good news like 10% revenue growth and having no net debt, which is great, they also had to disclose that the income tax department conducted a multi-day search at their facilities. So right from the start, we've got this mix of major wins and a pretty significant red flag. Okay, now let's get to the part of the business that actually pays the bills, their core engine. The real question here is, did the performance of their main products, bromine and industrial salt, actually match up with all the optimistic talk? So, to hear management tell it, things were great. They kept emphasizing how strong the market for bromine is, how robust the demand is, and that prices are looking good. By all accounts, the market wines were out their back. But here's where the narrative starts to fall apart. Despite that robust demand, the company just reported its lowest bromine production in nearly 3 years. They've got a backlog of over 10,000 tons. I mean, customers are literally waiting in line for the product, but Allen Chemicals just can't make enough of it. That immediately raises some serious questions about their ability to execute. And when analysts pushed them on why this was happening, a very convenient theme emerged. For both bromine and industrial salt, management blamed the prolonged monsoon. Now, look, weather is definitely a factor, but when you use it to explain missed targets across both of your core businesses, it starts to sound less like a reason and more like a recurring excuse. All right, let's shift gears from the sputtering engine of today to the promise of tomorrow. We're talking about the high-stakes projects in semiconductors, energy, and derivatives that really form the heart of the long-term investment case. And just look at the sheer scale of their ambition here. The planned initial investment for the semiconductor project is over 2,600 crores. I mean, this isn't some side hustle. It's a massive company-defining bet on a high-tech future, and it even has government backing. The timeline they've laid out is pretty aggressive. They've already broken ground and are aiming for production in about 30 months. That's fast, but it's really important for investors to remember that any real revenue from this huge investment is still about 3 years away. Their move into energy storage is even more of a long-term game. It's a very methodical, step-by-step plan. First, a pilot plant in the UK over the next year or so. Then, they'll design a gigafactory blueprint. And only if all that works out will they think about building a huge factory in India. This is a story for 2028 and beyond, for sure. And here we go again. That pattern of delays pops right back up. Their sulfate of potash project, well, it won't see any real sales for another year and a half. The new bromine derivatives plant is just kind of limping along at very low capacity. And even management themselves admitted that the Archean hydrocarbon acquisition is disappointingly slow and already 6 months behind schedule. See the pattern? Okay, now for my favorite part of any earnings call, the Q&A session. This is where the polished presentation gets a reality check. The questions that analysts ask are often the best signal of what the biggest worries are out there in the investment community. And sure enough, time and time again, the analysts kept circling back to one central issue. They weren't just asking about one missed target. They were asking about the whole pattern. Essentially, why is there this constant gap between what you say you'll do and what you actually deliver? And you could just feel this dynamic playing out. When analysts asked if there was a deeper execution problem, management would point to temporary external things like the monsoon.
When asked why new projects were taking so long, the answer was that they underestimated the red tape. And when they were pressed for specifics on how they'd fund that massive semiconductor project, the answer was basically, it's too early to say. A bit vague, right?
So after all that, the headlines, the performance problems, the huge plans, and the tough questions, what's the final verdict for a long-term investor? Let's break it down into the bull and bear arguments.
First off, just the tone of the call was really telling. Management sounded genuinely excited and confident about the future, especially that semiconductor project, but they got pretty defensive when they were questioned about today's performance. The analysts, on the other hand, were polite, but they did not let up. And their constant probing clearly signaled a growing concern about the gap between the company's grand vision and their day-to-day execution.
And this slide really nails the core dilemma for anyone looking to invest. The bull case is strong. You've got a potentially game-changing semiconductor project, strong demand, and a great balance sheet. But that bear case is just as convincing. You have a clear pattern of missed targets, recurring excuses, vague timelines, and new facilities that just aren't performing. And all of this leaves us with the one single defining question for any investor in Archean Chemicals. The ambition is huge, no doubt about it, and the opportunities could be massive. But based on this quarter and the consistent delays we're seeing everywhere, you just have to ask, is their vision writing checks that their operations can't cash? How they answer that question, with actions not words, will probably define this company's future.